Good morning. What is an interest reserve account and what are they used for? Well, an interest reserve account is a financial tool used primarily in construction and bridge loans to cover interest payments during the loan period. Essentially, that allows you, instead of making the monthly payments out of pocket, there's a kitty account that the borrower's interest payments are pre funded and drawn from automatically. And that's why they call it a reserve account. So, for example, when financing a ground up construction project, lenders often include an interest reserve within the total loan amount. And this ensures that the borrower doesn't have to make monthly payments while the property is under construction and being developed, a time when there's not yet income being generated. So that way it makes it more financially affordable is essentially the purpose. But how does it work? So here's how it typically functions. The lender estimates the total interest expenses for the construction period, and then these funds are placed in a separate reserve account at closing to be drawn upon later. Now, each month, as interest accrues, the lender withdraws from this reserve to pay itself, which gives them added security to know that the payments are going to be made when there's not income being generated. And this system helps maintain consistent loan performance and avoids the risk of later missed payments during the construction phase by allocating the funds as a set aside right from the get go. So, what are the benefits for borrowers? Well, number one is cash flow relief. You have no monthly out of pocket interest payments during your construction phase. Two, it makes it easier to underwrite your deal. So, predictable debt service coverage from day one makes a lender more willing to make the loan. Number three, gives you project stability, reduces borrower stress while focusing on completion and leasing. Now, who uses it? Well, an interest reserve account are common for, you'll see this often with developers and investors financing their construction or renovation projects on a new deal. Often we see it with bridge loan borrowers too, or between acquisitions and permanent financing, who need to reposition the property to get it where it needs to be for their long-term strategy. And a lot of times you'll see this with value add investors who improve underperforming assets. In short, an interest reserve is a strategic financing tool that helps borrowers manage cash flow, meet lender expectations, and keep projects on track. Now, if you're planning a construction or rehab project, working with a mortgage broker like myself and Medallion Funds, we can help you structure your deal with the right reserve, which will ensure that you have smoother execution and stronger lender confidence right from the get go. And that, my friends, is all for the day. Hope you have a good one.